Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance studios in London. It's Friday, 24th October. Coming up on the show, Trump terminates trade talks with Canada. Google and Anthropic announce a cloud deal worth tens of billions of dollars. And we'll take a closer look at what's next for gold and Bitcoin. So grab your coffee and let's own the morning. So President Trump said he would immediately stop all trade negotiations with Canada. He's angry about an ad aired by the Ontario provincial government which argues against his signature tariff plans and features the voice of former President Ronald Reagan. He made his feelings clear on Truth Social. He accused Canada of trying to influence a pending US Supreme Court case that could do many of his tariffs, including ones on Canada. The president said that the ad was, quote, fake and that tariffs were very important to national security. Trump has imposed 35% tariffs on Canadian goods that are excluded from the US-Mexico-Canada Free Trade Agreement. And earlier this month, Canada's Prime Minister flew to Washington to try to mend the estimated $928 billion trading relationship. Now, Trump's statement came after the Ronald Reagan Presidential Foundation and Institute said that the ad misrepresents a presidential radio address Reagan delivered in April 1987, and that his remarks were edited without permission. Now, Reagan is an icon of the GOP, and Trump has often referred to Reagan policies as his inspiration. Take a listen.
You see, at first, when someone says, let's impose tariffs on foreign imports, it looks like they're doing the patriotic thing by protecting American products and jobs. High tariffs inevitably lead to retaliation by foreign countries and the triggering of fierce trade wars. The result is more and more tariffs, higher and higher trade barriers, and less competition. So soon, because of the prices made artificially high by tariffs that subsidize inefficiency and poor management, people stop buying. Then the worst happens. Markets shrink and collapse, businesses and industries shut down, and millions of people lose their jobs.
Well, let's kick off three things with a look at where Wall Street might open later. And it's looking like a positive start to the day on signs of easing trade tensions and optimism surrounding tech. Now, President Trump and Chinese leader Xi Jinping will meet next Thursday in South Korea. The two leaders will be looking to de-escalate a simmering trade war between the two countries. The summit will come after lower-level talks between the countries this week as trade tensions between the two countries continues to rise. Now, Chinese stocks, well, they advanced today on growing optimism that a trade deal between the two biggest economies could be reached. The next thing you need to know is we're getting an inflation reading today. September's consumer price index is expected to show inflation holding stubbornly around 3%, underscoring how tariffs and service sector stickiness continue to complicate the Federal Reserve's path towards its 2% target. The report, set for release on today at 8:30 a.m. Eastern, was delayed by the ongoing government shutdown. It marks the first major piece of federal economic data since the shutdown began, now the second longest in US history, with no end in sight. And you also need to know that banks are preparing to launch a $38 billion debt offering as soon as Monday that will help fund data centers tied to Oracle. That's according to Bloomberg. This would be a record amount raised for AI infrastructure to come to the open market. JP Morgan and Mitsubishi UFJ are among the banks leading the deal. Now, Vantage Data Centers is building the two data centers which Oracle will ultimately use to host OpenAI. The projects are part of Oracle's larger goal to invest $500 billion into AI infrastructure alongside OpenAI in a project that's called Stargate. Well, sticking with technology, Intel reported third quarter earnings and revenue that topped Wall Street expectations after yesterday's closing bell. Unsurprisingly, Intel shares are really popping in the pre-market, up almost 8% as you can see. Ben Bajarian from Creative Strategies gave his reaction to the results to my colleague Josh Lipton.
I think, the CPU or the role of the CPU, both in desktop and server, doesn't go away in the AI era. In fact, I think there's some evidence that it becomes even more important, if not to see CPU as a category in data center, as a growth opportunity, both in dollars and volume. And obviously, what he's done with NVIDIA becomes a really interesting strategic lever, because you could argue that they're going to leverage NVIDIA's dominance across the stack, especially even in data center, and tie their CPUs more to the upside in NVIDIA. So while that might be less attractive for those who want to see them, really pull out an AI accelerator and go after the volumes from a GPU or a dedicated AI ASIC, the opportunity there to be the preferred or the head CPU head node of choice for NVIDIA actually becomes a really interesting upside. So I think there's variances there to see how that plays out. Again, we don't want them to completely give up on this idea of GPU or Intel-based ASICs for inference. But right now, right, as you know, it's an NVIDIA show, and I think being tied to NVIDIA is actually a net positive for them, both in client and in server.
That foundry business, Ben, how successful do you think they're going to be there? Policymakers in Washington want to see them successful for geostrategic reasons, but what do you see ahead in terms of attracting external customers for 14A, that next-gen manufacturing process?
Yeah, I mean, I think you look at this where, we want to see some customer engagement, some customer work with the PDKs that will come out eventually for 14A just to see the quality. I know just from having talked to a lot of folks in the industry, especially in the supply chain, a lot of people wanted to see Intel deliver their product roadmap. So that's Panther Lake and Clearwater Forest on 18A before they would, really take this seriously. Essentially, it was approve your process, your packaging is state of the art. And if it is, then we'll take a deeper look at it. And it feels like that's the case. Panther Lake's a good product. Clearwater Forest is also a very good product. And so I think this will help people, justify taking a deeper look at the quality of 18A. And then we just go from there, right? They need customer wins. They need wafer customer wins for 14A, which will also slightly come backward to 18A and 18AP, but they need that customer to commit so they can commit to 14A.
Final question, Ben, just the minute I have left. Lip Bhutan takes over in March. He's got a turnaround plan. He said it's going to take time. What do you make of his plan, Ben? Does he have the right priorities in place?
Yeah, I mean, I think so. I think he's been a very good deal maker, to be honest with you. I mean, obviously, the deal with the government helps. The deal with NVIDIA helps. I imagine that there's still some more very strategic deals coming. It seems like he's very willing to be customer-centric and essentially just say, what do we need to do, right, to become partners and have you work with Intel and Intel Foundry? So I think that's positive. And obviously, I think everybody's happy with what's happening on the balance sheet, that they're getting costs under control. We want to see them continue to invest and execute. And I think this quarter is evidence of that. And if this ramp for 18A products is good, like I said, I think that still sets up well for Foundry. So his leadership, his willing to be dynamic, his willingness to maybe do things differently from a deal making standpoint, I think is helping. But again, we need more customers to come to Intel Foundry, and so I think he's the right person. But I think everybody will feel better when we see a couple of customer commits to go forward for Intel Foundry.
Well, we're heading for a short break now, but stick with us as Marion Leboeuf from Deutsche Bank joins us to take a closer look at gold and Bitcoin. Take a moment to dive deeper into two of the most talked about assets right now, gold and Bitcoin. Even if gold is down, gold funds received their largest weekly inflow on record in the week to Wednesday. That's according to the Bank of America. The numbers show that governments, banks and retail investors have all increasingly turned to gold as a so-called safe haven. Although, as the last couple of days shows, that doesn't mean gold can only go up. It comes down quite a bit since its recent intraday high of $4,398. As for Bitcoin, we've seen massive swings there, with one of the largest sell-offs in the history of the cryptocurrency just 2 weeks ago. But many investors remain bullish as crypto remains on the agenda in Washington and beyond. Two headlines for this morning. One of the biggest names in crypto, Changpeng Zhao, founder of the crypto giant Binance, who was sentenced to prison and had admitted to allowing money laundering on his platform, has been pardoned by President Trump. And other members of the president's family are also continuing to personally invest in crypto and push for its rise. Eric Trump just reiterated at a conference that he thinks Bitcoin will soar to $200,000 within a few months and that it will reach $1 million by 2030. Well, we're going to talk about all of this with Marion Leboeuf from Deutsche Bank. Welcome to the show, Marion. So Bitcoin at $1 million. What do you make of all these wild predictions?
Very delighted to join you here today. I think it's a highly optimistic prediction, far from what we have in our internal model. And actually, when people try to value Bitcoin, I would say they tend to value it between 0 and 1 million. So I'm used to have like this forecast in between. I still think that the value is continue to be based on wishful thinking. It's still a very volatile asset. It lacks of intrinsic value. The usage is slightly limited as well. It's very risky, very speculative, vulnerable to cybersecurity, but clearly it has been on the rise.
Now, what do you make of the debasement trade? There was a lot of noise around it, let's say about a month ago, where people were seeing Bitcoin prices rise along with gold. Do you think now that, though, with the moves that we've seen in recent weeks, that debasement trade idea is dead?
On gold, I mean, clearly it's been seen as a safe haven. If we look at the performance year to date, it's around 55%. It's the strongest annual performance since 1979. So very strong asset. And if we look at the reason behind this strong demand, the main one is the demand from central bank. Gold has no reason to 30% share global FX. For central bank gold reserve holdings. Q2 largest increase of gold purchase were by the central bank of Poland, Kazakhstan, Turkey, and China. So that's the primary reason. But we've seen as well some demand from ETF. Total gold ETF holdings was the highest amount since September 22. And other reasons like the decline of the dollar, geopolitical tensions around the world, the fact that consumers, investors are expecting the US to cut the interest rate, the equity and bond market risk as well.
But Marion, I mean, you say gold is a safe haven, but look at the swings we've been seeing in it. It's not exactly acting like a safe haven when you see massive swings up in both directions, really.
Yeah, I mean, it's been performing extremely well since the beginning of the year, and if you look at history, I still feel consumers think it's a safe haven asset, but clearly it has been declining this week, and gold prices fell over 5% on Tuesday, which is, you're right, the biggest decline since August 2020, and it was driven mainly by ETF outflows.
And what about this notion that many are putting forward that Bitcoin can be seen as a reserve asset for central banks? What do you make of that hypothesis?
So I would say, I mean, first of all, if we look at the rise of Bitcoin, it's been extremely impressive. So the performance year to date, it's less than gold, but it's very impressive still. And if you look at Bitcoin prices, especially since November 23, it's been on the rise for a couple of factors. First, the Bitcoin ETF was very successful, one of the strongest successful in history. We had as well in 2024 the halving episode, and actually if you look at what's going on before and after the halving episode, prices tend to increase, and the halving episode occurs every 4 years. Third factor that we had as well was the Trump effect, I would say, and clearly President Trump was extremely optimistic starting over the summer, and he's been elected, which drive a very strong positive momentum. And we also had the regulation, especially the stablecoin regulation, which drives a lot of optimism around crypto assets. And all of that we've seen as well a growing institutional adoption.
Marion.
To go back on your... Oh. Yes.
Oh. Apologies, Marion. I'm afraid that's all we have time for. Marion Leboeuf from Deutsche Bank. Many thanks for your thoughts here on Market Sunrise. Okay, we're heading for a short break, but stick with us. When we're back, we'll be looking at trending tickers and market movers. Stay with us on Market Sunrise. Time for today's trending tickers. First off, in the auto sector, Ford is trading up around 4.5% in pre-market. The story here is what we learned during Ford's earning call last night, and I'm not talking about the fact that Ford, like other major automakers, topped expectations or that it revised its guidance slightly lower for the year. No, the significant story here is that Ford is putting production of its flagship electric truck on the back burner. The automaker is moving workers from its EV unit to boost production of its diesel and hybrid versions of the F-150. Next up, one of the biggest stories of the week, and in fact, one of the biggest AI deals ever. Alphabet is trading higher, both tickers up nearly 1.5% in pre-market. That's after Google and Anthropic announced the details of the multi-billion-dollar deal we told you about earlier this week. In brief, Google will supply up to 1 million specialized chips to Anthropic, the company behind the Claude chatbot. Called Tensor Processing Units, the hardware devices provided by Google will help reduce Anthropic's reliance on costly GPUs from NVIDIA. With this deal, Google strengthens its position as an investor in Anthropic and as an AI hardware provider. The only question, while we know the deal is worth tens of billions of dollars, Google declined to comment on how it will be funded. And while we're on the subject of AI hardware, let's take a look at Intel. You know by now it's reported earnings last night and shares have been soaring since the American chip manufacturer said it had beat analyst expectations on growing demand. They shot up nearly 9% earlier this morning, and here's where they stand right now, up just below 8% higher in the pre-market. And for more news on advanced technologies, we told you yesterday that some quantum computing names were drawing a lot of attention from investors after a Wall Street Journal report that the White House was considering taking equity stakes. Since then, we have reported that the White House is not considering such a move. Still, these three stocks, IonQ, Rigetti, D-Wave, well, they keep rallying, and that's certainly in part because of the broader momentum in quantum computing, a space where companies, including Google, have been touting major advances. So quantum computing is definitely a buzzword right now, but what is it exactly? And what does it mean for us as tech users? Well, our tech editor Dan Howley explained it all to Julie Hyman here on Yahoo Finance.
We have seen an increase in quantum investing from the likes of Microsoft, Amazon, Google. IBM has been in the quantum space for, it feels like forever. So you can't count them out when it comes to this idea of quantum. But yeah, this is kind of, it's not necessarily the future of all computing. It is a future of computing. I think the thing that people might get wrong when it comes to quantum computing is that they're going to be, the new CPU, your central processing unit, your regular computer, your smartphone. The way that some experts I've spoken to have phrased that is like taking an F1 car to the supermarket. Like it's impractical, it's unnecessary. These computers are also massive. When you look at them, they don't look like your standard laptop.
Right.
These are in a facility. They have to be shielded from the outside world. Things like hydrogen molecules from the air can mess up the calculations that they're doing. They're dealing with subatomic particles that are called qubits. So when you look at a regular CPU, it talks to the different parts of the computer using ones and zeros. It's called binary. It's the base computer language. And then everything else kind of builds on that. So when you swipe, eventually that's translated into a 1 or a 0, and it's giving the processor instructions, or and vice versa. These qubits exist as ones and zeros at the same time. So what that allows is for them to do parallel processing, and essentially that means that you would be able to do calculations that would take classical computers potentially tens of thousands of years to complete. So it's a powerful technology, and the folks that I've spoken to in the past have said it can influence everything from healthcare to sciences of materials, coming up with new types of structures, things along like big questions, right? We're just not there yet. And so it's a matter of researching it. And there are folks who will say, well, it's right around the corner. It's been right around the corner since like the 50s. And so there's constant advancement in it for sure, but it's not to the point where it's like, all right, well, tomorrow I'm going to be able to walk down the hall, flip a switch, and turn on a quantum computer. But it is very important to get into because, on the world stage, if you don't want to cede the lead in any kind of technology,
right,
you need to make these kinds of investments.
Well, for market movers, we're going to look ahead to next week, as there's certainly a lot that will make an impact. First up, earnings. Next week is the busiest of the season, with over 170 companies expected to report. Perhaps most significant is that 5 of the Mag 7 are reporting next week. Microsoft, Meta, Alphabet, Apple, and Amazon are all on deck on Wednesday and Thursday. Remember, these stocks are the backbone of the S&P 500, so whatever they announce will be huge, one way or the other. The Mag 7 stocks accounted for 24% of all S&P 500 earnings in the second quarter of 2025, with the proportion expected to increase just slightly to 24.3% in this current third quarter. Okay, the next thing that investors will want to keep an eye on is interest rates. The Fed is widely expected to lower its current benchmark rate of 4 to 4.25% by another quarter percentage point when it decides on policy on Wednesday. With that already factored into asset prices, markets are likely to be more sensitive to any forward-looking language from Fed Chair Jerome Powell, with the central bank expected to cut rates further at its next meeting in December. Possibly clouding the Fed's decision-making ability is the lack of data provided by government since its shutdown began on October 1st, including delays in employment releases at a time of simmering worries about the health of the labour market. And finally, investors will be keen to keep an eye on those talks between Presidents Trump and Xi on Thursday. Investors in the main have largely shrugged aside trade-related risks in recent months, but renewed US-China rifts have brought tensions between the world's two largest economies back to the fore. Okay, we've got some breaking news and actually breaking earnings. Procter Gamble has just reported better than expected sales for its latest quarter as consumers snapped up the company's Gillette razors and Secret deodorant. The company reported a 2% organic revenue growth for the period, with revenue and earnings per share also beating expectations, led by growth in beauty and grooming categories. P&G largely maintained its outlook for the fiscal year, but is now expecting a more muted impact from tariffs and commodity prices, with the expected impact of the levies at $400 million after tax and shares up over 3% in the pre-market. Okay, let's check in on the markets before we go. We start with Asia, and as I said, stocks here all in the green. The Korean Kospi, they're up 2.5%, for example, and back to a new record high. But investors pretty bullish in Asia after those talks between Xi and Trump were confirmed by the White House yesterday. Europe's a bit of a weird one, actually. Stocks here are lower despite some pretty impressive results from the likes of Sanofi, Saab and NatWest. We also had some pretty good PMI data too. Let's have a quick look at where Wall Street might open as well. And everything in the green there, as you can see, hopefully on hopes that these trade talks with President Xi and President Trump might give us a good deal here. Okay. And also, they're also up on those tech stocks as well. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the Market Open on Morning Brief. I'm Ramzan Karmali. Go own the morning.